Well, I think it's a little bit of a tale of two cities. I think the fundamentals for retail are very strong. Consumers are in a great place. Obviously, consumer confidence, the highest in 20 years. The unemployment rate, the lowest in 50 years. Tax reductions, tax cuts really starting to help both consumers and businesses. So retailers are in a good place. I think one of the things that happens, and this is certainly, and Dana can weigh in on this too, this is no offense to the analyst community, but I think there are some analysts who really understand the new retail, and there are some who don't. And there are some that are still using outdated metrics to assess the health of the retail industry. And there's some that really have begun to understand what drivers are really going to produce winners and losers. And I think that's one of the reasons that stocks have underperformed. But overall, we're very confident it's going to be an outstanding holiday season. The numbers are going to be very good. And we're looking forward to a great next few weeks.
What are the outdated metrics that we're talking about, just so we stop referring to them?
Well, I think the issue really is looking at are companies executing their digital strategies at a high level? Are they bringing in new brands? Are they developing new products? Are they really innovating? Are they creating new partnerships? Are they being really creative with the way in which they do fulfillment and the way in which these sort of initial state bricks and mortar companies are taking advantage of the technology that exists today and the way that the initial state digital companies are starting to use real estate. So we're seeing the convergence we've been talking about. It's finally starting to happen.
The corollary, though, to that new retail, and Dana, we saw this, we mentioned Macy's in the first segment, how e-commerce sales seems to be coming at the cost of margins in many cases. And so is the new retail a retail world environment in which an e-commerce dollar is not as high a margin a dollar as a bricks and mortar dollar?
Overall, basically, that e-commerce dollar comes with a higher cost. What you're looking to get, though, is higher total sales overall. Are you going to gain more share?
And maybe I'm late to the party here. The whole idea of e-commerce from the very get-go
was higher margin.
Was a higher margin business.
You don't need the overhead.
You didn't have to pay for the overhead of all of these employees. You didn't have to pay for the rent on Fifth Avenue. You didn't have to do all of this. The marketing costs were going to be cheaper, all of it. And now I find out that the whole thing's a lie?
I think it's not a lie, but I think what Matt was referring to, that convergence is happening. You need a store and you need digital. Because if you close a store, guess what? Your digital sales go down. If you open a store, your online sales go up also. So it's about both that really work.
Matt, just shifting gears slightly in terms of the tariffs. If the tariffs the tariffs that are currently in place go from 10 to 25% Jan 1, and new tariffs also get, put in place shortly after that, what is the impact to the retail industry in your view?
Well, I think, Melissa, that's one of the things you're seeing with the stock valuations now. I think people, the holiday season, I think, is pretty well baked in because of the way inventory is allocated and the kind of programs and the fulfillment strategies that retailers have. So I think one of the reasons you see valuations a little lower is because people are looking ahead to 19. We certainly agree with the administration. We've said all along China's practices are unfair in terms of technology transfer, market access, intellectual property, all those things. We just don't think that imposing taxes on U.S. consumers is the right way to go. So we're hopeful that we'll see some movement towards a real dialogue in a broad coalition, and that'll start with the G20 meetings soon in the next week. But we would certainly prefer not to have those tariffs hit, because we think then you go the other $257 billion and you escalate the 10 to 25% on the existing tariffs. People are going to feel that. I think there's no way to escape that.
Right now, they're not really feeling it, right? I mean, we're hearing from a lot of retailers that it sounds like they're really trying to absorb whatever additional costs there are. They will feel it, though, should the tariffs go higher or there be new tariffs in place.
Well, listen, everybody knows that there's a potential for this to happen, so people are taking steps to prepare for it. And as you've heard at least one CEO say many times, there are lots of levers they can pull, and they're going to pull those to serve their customers and meet the expectations of the street.